Let's go. Good to see everybody. Teresa,
What's up, Cheston?
long time no see. What's going on?
Yes. It's been a little minute.
Good to see you.
I'm trying to catch up on
Cheston, what's going on, man?
Baxter, what's up, man? How you doing?
Shit, everything. How you doing?
I like the new look.
Excellent. On the beard, right? Yeah. My wife, who just hopped on, she said, let me see you with the beard. And she likes it, so it stays.
I know it's right.
Yeah. All right, guys, we're going to get into it today. Welcome. Wherever you're chiming in from, we have some people that are chiming in from our new group, man. We got a new group called the Truck Profit Academy. And we're also linked over there. So guys, I might not be able to, well, I won't say I won't be able to, but I might not pay attention to the chats over there tonight as much. So if you do have something that you're communicating, if you're watching live on YouTube, if you're watching live through the Truck Profit Academy, I'll get back to you. Well, we'll get back to you with any questions that you have, any comments that you have. But it's great to be with everybody here. Everybody on the Zoom call, man, it's good to be with you guys. Excellent, man. Excellent to be with you guys. I miss being in these conversations with you. And, you know, here's my promise. I'm always going to have these calls, right? Whatever season, whatever time of the year, we're still going to have these calls, guys. All right. That's my promise moving forward. So no more breaks in the off season or during the peak season, rather, like tax season. Just gonna have it work, guys, if that's okay with you. And tonight, by the way, does that sound good? Everybody in the call, does that sound like a fair plan? Does it sound like an opportunity there? It sounds like something that's really good. That I'm gonna be here every single week, regardless of whatever
great.
season. All right, awesome. So we're gonna keep elevating the conversation. The more and more that we do this type of work, the more I enjoy doing this type of work, all right, because I meet so many people in situations and in circumstances, especially in the trucking industry. And what I've realized is that, man, you ain't that special. Everybody goes to the same stuff. And we're not too different, especially in this industry. Everybody goes to the same things. And it's really a matter of who decides, who chooses in the moment to execute on certain principles over and over again. That's going to determine who wins. And that's going to be anything really. But here specifically inside the conversation of the trucking industry, it is important that we execute, that you guys execute on a specific strategy, something that you can fall back on, like a principle that you can fall back on to execute every single day over and over again. So that's what we find is that when people do this, like we come up with all kinds of plans for people. It doesn't make a difference when the plan has no integrity behind it, which means I do what I say I'm going to do, right behind that plan. And today's going to be more the same. All right. So I'm excited to be with you today to talk about like conceptually, there's going to be some things we talk about, but more so than that, well, how does it work for you? Like what kind of difference is it going to make when we leave this conversation tonight and you go out here and start executing on some of the things that we talked about today? That's what's really going to make the difference in this conversation each and every time that we get together. All right, so let's get started with it, guys. Number one, if you didn't know, now you know. This is me. Most of us in this conversation that's on this call, you probably see me, know me in this conversation on the Zoom call. If you're watching from someplace else, this is who I am, Cheston Bulgin. The company is called By the Bush Consulting, and this is how you reach us, 888-4BTB now. That's 888-428-2669. This is the website, bythebushconsultants.com. Saying you can get to the same destination by going to youraccountingsuperhero.com. And that's my email address, cheston@bythebushconsultants.com. And we just started this new group, guys, and we already have, it was 22 members. We just started it, really, and got 22 members in this new group. And thank you, by the way, to those members who've come on board. I want to acknowledge you and commend you because that's an action that's taken in line with what we call an intention. Like if we really want something in life, we want to align ourselves like actions, like being in actions with the things that we say we want. And that's a clear action to be a part of this group. And the group is called Truck Profit Academy. There is a link that I'm going to put in the chat real quick. Let me just do that up front. All right, so if we're in this conversation at Zoom call, I'm going to make sure that you guys get access to that link. But just look for truckprofitacademy.com. You can sign up directly by going to truckprofitacademy.com. And let me grab this link. For you guys that are here on the Zoom call, you can join using this link. Guys, there's a chat that keeps going on for this call, this Zoom call. You're part of it. If you're in this community, if you're on this call, then you can see the group chat. Always, it's always there, meaning you can go back and look at it over and over again. If there's anything in the chat, like transcript-wise or comments or communication in the chat. So if you have questions during the conversation today and you're on the Zoom call, it would be a good idea to put those questions in the chat or put those comments in the chat. That way, if you and I come back to that, it'll still be there for us to have a reference, if that makes sense. Okay, so good. So I'm hoping that's clear, guys. A couple of things I just said there. We have this new group. It's called the Truck Profit Academy. And I just put that link inside of our chat here in Zoom. So that if you're not a member of that group already, you can become a member of that group just by following that link and requesting access to that group. Okay, this is a conversation for you. Like if you're a fleet owner, if you're an owner operator, if you're somebody who's in the trucking industry and you're really looking to get to the next level, which means, well, how is it that you can put more, have more profitability in your company and then have more cash in the bank at the end of the day and then be able to keep that cash as well? Okay, so how do we do that? We use specialized accounting and tax strategies for the most part is how we help people do that. You see it here on the bottom. These are some of the things that we do for you. We do accounting, we do QuickBooks Online, systems technology that goes along with the QBO. It's more so than that. We work with systems and technologies to make sure that you have operations that are fluid and that work, and you have some ease and clarity inside of what you do as a fleet owner. All right, so you want it to make sense so you can actually run your business with less effort and do more, right? Do more with less effort. That's the end goal here, and still maintain that level of profitability so you can scale. We do tax strategy and then tax planning. Okay, two different things. Strategies, okay, what is our approach? And the planning is, well, how we're going to execute on our approach, right? That's what it is. Two different things. And then we do business advisory. We can look inside of the operations for you, fleet operations, and say, okay, well, where is it that you're winning? Fantastic. And where are there opportunities to win? Even greater, even more fantastic. So that's what we do in a nutshell. That's an introduction. Thank you for allowing me to do that, guys, because it's going to make sense the more that if the people who do not know me, they get to know me. So thank you for that. All right, so a quick disclaimer before we get started. The following is for educational purposes only, and it is not to be considered financial accounting or legal advice. Please consult your tax, accounting, and or legal professional for specific advice. So today's conversation, guys, we're talking about S Corp structure for trucking, specifically how to use it for your trucking company. And I like being in this conversation because we talked about tax strategy. Like this conversation is more in line with keeping money in your pocket. Like it's good to go out here and make money. All right, now when we go out here and make money, well, we want to have strategies in place to be able to keep it. S Corp is one of those foundational conversations that we want to have that strategic plan in place. We want to use this vehicle for your operations. In most cases, okay? Now I'm going to go into more detail as to why that's the case, okay? And hopefully eliminate some confusion around the topic. Sometimes it can be confusing to be with, and to like this conversation of what type of structures. I know my wife, she talks about, man, why is it that we have to do all this stuff in order to just keep our money? Why can't it just be simple? Like go out here, make money, and just keep it. Right? Why do we have to know all this other stuff? I'm like, hey, I'm on board with that. Same deal. And also at the same time, it's like, well, this is what we deal with. So if we deal with this, well, we might as well go out here and learn the game and win. This is the game these are the rules of the game as it stands. And why not just play the game at the highest level by knowing the rules of the game? I can't go on a basketball court and say, hey, look, man, I don't like to dribble this ball. Why can't I just walk with this ball and then, run into people, knock them down? That would be good for me because I'm larger than a lot. So I can just run into people, knock them down, then put the ball in the hoop. Right? Why can't I just do that? It makes more sense for me. No, it doesn't work like that. There are rules to the game. And I need to understand what a travel is. Oh, I can't do that. It's called traveling. All right? I got to bounce this ball in the ground to get to where I need to get to. Otherwise, the other team's going to get the ball. So I get it, right? So in the same respect, right now, we want to understand that there are rules to the game of business. And really, rules to the game of wealth creation, right? And being able to keep more of your money in your pocket. And if you know those rules and play the game with those rules at a high level, man, it's actually fantastic. You can win. It's like a lot of people talk about Donald Trump and how he's not paying taxes. I can't be mad at him because he has people that understand how to set him up to win in that way. And that's available to each and every one of us if we so choose. We just got to know the game and play those rules. So S Corp structure is one of those things that we want to look at because it is a part of the rules of the game to help us really win big. All right, so let's talk about what these structures are to begin with and what they're for. Any type of structure that we create, whether it's an LLC, C Corp, S Corp, they're designed to give us number one protection, okay? S Corp, number one, gives us protection from the dealings of the business, especially in the trucking industry. There are things that you do not want to have spill into your personal life, which is why you form a structure to begin with, to have that level of protection. And hopefully that makes sense. All right. Now, if you did not have a structure like an S Corp and LLC, and you go out here and you do business and something bad happens, let's say you have an accident, God forbid you have an accident on the road, or there's some type of liability that exists inside of your business where now people want to come after you for lawsuits. Well, it's not just your business that's at stake. It becomes you personally. It becomes your partner, your spouse also. So you're putting your whole family at risk when you don't have a structure of protection around your business dealings. Now, the LLCs, the C Corps, the S Corps, they do this to make sure that you have that protection. Whatever's in the business remains in the business as far as liability, everything else, and then whatever your personal assets outside of the business, it's separate. All right, it's not really subject to risk, is what I want to say. Now, there's some things that we want to talk about regarding that. Like when you do have a business, you have an S Corp or another structure set up, it does matter how you conduct business. You want to treat it like a business that's separate than you. And if you don't, then you kind of X out that protection that it would have. You wouldn't have that protection anymore. They would see it as no different from yourself. All right. That's another conversation for another day. But I just want to put that out there that number one, these structures are for protection. And there's a certain way that you want to behave in order to get the full benefits of that protection. And hopefully that makes sense, right? And guys, if you have any questions along the way, comments, you can go ahead and put them in the chat. And if I'll get to them during this time period, great. If not, I'll answer them in our chat later on. Okay. Good. I got people coming in. Bear with me, guys. All right. So fantastic. The other thing that we are looking at with the structure is tax reduction. This is the main point we're going to talk about today. We're going to talk about tax reduction, keeping more money in your pocket when it comes to using this structure. This is one of the main reasons that people use this vehicle at an S Corp, is because at the end of the day, it allows you to keep more money in your pocket when it comes to your profitability. So what do I mean? A couple of things that we deal with when we make money. We deal with earned income. We deal with passive income. Two different types of income structures, basic income structures that we have. Earned income, passive income. So if you don't have an S Corp set up and you're just going out here and doing business, let's say you form an LLC and you don't elect to treat it any other way than the LLC that's set up, well, then you're going to be dealing with something called self-employment tax, right? There's something that you're going to be dealing with to a large scale. You have what we call unlimited exposure to that tax, which is something in addition to your regular federal income tax. All right, hopefully that makes sense. Now, if you're doing that, if you're running out here and you're just go ahead and create an LLC, you don't choose to be treated any differently than how you already just set it up, then you're going to have a huge tax bill, most likely, if you're making money in your business, right? So most of us in this conversation really want to be, are pretty much at a place where we're making money. If you listen to this conversation, wherever you are, you're making money in your business. Now, think about this. All of that money, if you don't have this structure of an S Corp, you're going to be subject to an additional 15.3% of the net profits of that income, that net income from your business, all right, which is one of the main things that we're looking at when we're talking about business structures and what we can do to save money in taxes. So if you don't have this strategy in place, you don't have this set up, you will have all of your profits subjected to that extra 15.3% in taxes, which is why somebody will come at the end of the tax season talking about, man, why do I owe so much money? I only made this much, but why is it that I have to have this huge tax bill at the end of the year? And why is it that I really wasn't accounting for this in my quarterly estimates throughout the year? I really do hate having to come out of pocket $15,000, $20,000, $30,000 or more in taxes when I'm not expecting that, right? I have a client that we're working with. We just switched them for a long time. Man, this company's doing really well, right? They've been doing really well for now, since they came on, it's like almost 2 years now. They've been able, this trucking company, right, been able to take their income. When they first came in, they were doing, I think, right around $8 million. No, not even. They were doing $3 million in revenue, right? And then they were profitable. They were making like 400,000, like net profit, right? Which is still a big chunk of money, right? To not have an S Corp structure, but they didn't have that S Corp structure. So they ended up having to pay taxes, self-employment taxes, and regular income taxes on that full amount, $400,000. When they didn't have to, they could have switched it and paid a lot less, right? They would have only been subjected to a certain amount, which would have been how much they paid themselves in wages, all right? And we're going to talk about that in a little bit, all right? But now get this, guys, that same company, right? They've grown, they've done well since they've come on. And last year they did like, what, 13 million in revenue? And they still didn't switch, right? Mind you, I came and brought the conversation to them about this, right? But they did not do this, and the impact is that they have to pay nearly $1 million in taxes for last year, right? When they didn't have to pay nearly close to that amount if they had structured it the way that we were talking about when I brought the conversation to them, right? So now, fast forward a year later, we're doing the switch, and they get to save that money this year and each year moving forward, where they literally can save almost 7 figures in taxes just by this switch, all right? Now, some of you are young in the conversation and you have not gotten to that level yet to where it's going to impact you to that degree, but it still impacts you to like a large degree, right? I have a client that we work with. I'm just doing their taxes today, as a matter of fact, and they've gone from paying out of pocket like $7,000 to having a $1,000 refund, right? That makes a difference in a family, right? Where that's an $8,000 swing. What could you do with an extra $8,000 in your pocket, right? It makes sense to actually switch to the structure and then wield the structure in a way that works, in a way that serves you, all right? So I'm breaking this down. I'm framing this conversation so that you really understand the impact and the power of really switching to an S Corp is that self-employment tax is a real thing that each and every business owner wants to deal with. And I got a text from my son, who's actually on the line and watching live. What's up, Chess? He's 2.0, right? And he's starting a different type of company. And, the idea behind that is like, well, how do we get structured from the beginning to help us win? If we're going to be profitable to a certain level, when does it make sense to actually make that switch to an S Corp? When does it make sense to use this structure to make sure we're optimized when it comes to keeping money in our pockets? Okay, a couple of things we're going to get into in this conversation, and we really dove in deep real fast is what I want to say. And now we're going to talk about really what this looks like and what this means. All right. So a couple of technical things. And I know people's eyes glaze over with technicalities, but it's important that we talk about some technicalities when it comes to structures and tax treatment if you want to keep money in your pocket. These are the rules of the game, and this is how you keep your hard-earned money in your pocket. Okay, so we're going to talk about why. What does this really look like? So S corps are what we call pass-through entities. All right, most of what small business owners that we deal with is called pass-through structures, which means the business, the entity itself, the S corp itself, does not have a tax liability. It does not. Okay, that's what a pass-through entity means for part one. Half of that, half of the statement is, the business does not have a tax liability. All right. So I want to say that one more time. The business, for a pass-through entity, a business does not have a tax liability. All right. So get that. I just want to make sure that's clear. And a lot of people I have conversations with really don't understand that one point. It's important to understand that your company does not owe taxes. All right. For a pass-through entity. What else? Like another pass-through entity would be a partnership, and then sole proprietorship. That's also considered pass-through in a kind of rudimentary form of pass-through, right? And then S corps, they are pass-through entities. Okay, and basically what that means is that the company does not owe any taxes. The owners of that company owe taxes for whatever the results are from that company. All right, the tax liability passes through to the owners. So with an S corp, it means that the tax liability passes through to the shareholders of that S corp. All right, so that company doesn't owe taxes, but the people who are actually on that as shareholders of that S corp, whether it's one owner or it's multiple owners, the proportionate share of the income of that business is passed through to the owners to handle on their individual taxes. Okay, and that's who owes the taxes at the end of the day, which is great, really. It does make it a whole lot better for this type of business model because you're really simplifying how your income structure works. So think about it like this: all the money that you make, they report that on a tax return. They do file a tax return. They report that money, the income on the tax return. But then they take that tax return and say, okay, well, who are the owners of that? They'll take that form, that K1 from the S corp, and they'll say, well, this K1 belongs to this owner, which is just a representation of how much income is proportionally given to this particular owner versus the other owners, whether that is a 50-50 share or 33% share or whatever that looks like. They want to attribute that amount of income for that business to that owner. All right, that's passed through. That's what that means. All right, they take that K1, which has the share of the profits for that owner, and they take that and they put that on the individual's tax return for them to handle at the individual level. Okay. Now we want to talk about this a little bit more in detail because how is it actually going to work? It's a good concept is what I want to say. Really good concept here. But at the end of the day, it doesn't matter what the concept is. It's going to be how you execute it. What are you doing? All right. So there's a couple of things to consider, and I want to share this with you. Let's go. And guys, we're going to go until about 7:45 tonight. So we got about 20 minutes or so left on the call. And I want to make sure this lands with you in the communication, okay? So I want to bring this out here so we can see it. So there's some compliance rules with an S corp. One of the main rules with an S corp is that you have to take a wage as an owner of an S corp. More than 2% shareholder of an S corp. You want to take a wage, you have to take a wage. All right. Now, the wage that you take is what they call a reasonable compensation. And the wage is in the form of a payroll, just like you would get if you were working at a job. But your company would cut you a paycheck for your S corp for a certain amount. And that certain amount is what we call a reasonable salary or reasonable compensation. But what is reasonable? Okay, reasonable is a little bit of a loose term when it comes to paying yourself wages. And for example, if you went out and your company profited $40,000, it's not reasonable for you to pay yourself $55,000 in wages, right? It's not, doesn't make any sense, right? Now, why doesn't it make any sense? Because reasonably, your company didn't make that much money to pay you $55,000. But what would be reasonable, right? What we use here as a rule of thumb is that whatever your net income is, what are your net profits of the business, we look at that 40% rule, right? That would be a reasonable wage to pay yourself. And why would you want to do that? Why would you want to pay 40% versus another percentage? Well, let's take a look at this, all right? Now, your S Corp, we're going to follow this line to the right. You're looking at tax optimization. This is why we're in this conversation, so you can keep more of your hard-earned money. That's basically what that means. Tax optimization means you get to keep more of your cash in your pocket and not give it to Uncle Sam. Okay, that's the goal by having this structure. All right, so there are different ways that you can extract income from your S Corp as a business owner. And one of the ways that we do this is called distribution. All right, so this is money that is not taxable to you. When you take money out of your S Corp, it's not really taxed to you. Okay, cool income, right? To think about, I can take money out of it and it's not taxed. Yeah, I want to do more of that. Let's do that, right? And there's a limit to what you can take out of it via distributions, because if you don't have that money in the business, then you cannot distribute that money from the business, right? If you did that, if you took out more than what you have in that business, then that would be considered taking income in excess of basis, right? Distributions, we call it distributions in excess of basis, which means basically is a term that means that you took more money out of the company than what you have in it. And they consider that, oh, now it's going to be taxable. And that's what that means. Okay, so we can't do that. But otherwise, distribution is a really cool way to take money out of your business as an S Corp, right? Pretty fantastic. All right, now you can take up to the amount that you have in it, no more than that. You can take less, but you cannot take any more. Or you could, but then if you did, you'd actually owe more money in taxes. All right. Now, the other way that you can take this out is in, we call it wages, right? And this is taxable. This is what we call the earned income. It's like self-employment. This is the thing that we're dealing with. We want to minimize the amount of self-employment taxes that we have, and self-employment taxes deal with FICA, right? So you pay federal tax and you pay FICA with your wages. So if you ever looked at a paycheck, you'll see Social Security and Medicare. You'll see that on your paycheck, right? That's what we call FICA. Okay. Now, the other side of the FICA is what the company pays. So you pay it as an employee and you also pay it as the owner. That's what we call self-employment tax. Okay. That's what we want to reduce. Now, if you did not have an S Corp, everything that you profited, all the money that you profit is subjected to that, right? That's the net income of your business would be subject to the entire net income would be subject to the FICA tax in addition to federal income tax. Okay. Now, the third way is what we call the profits of the business. All right. Now, that's what gets taxed. Okay. That's what gets taxed as well. But guess what? It's not taxed with self-employment tax. It's just federal income tax. So the idea here, guys, now, as we're taking a look at this and looking at each one of these, and really between the two, all right, we're balancing the wages and the net income because these are the taxable events inside of your business. The idea is to reduce and pay as little in taxes as possible. Now, if I were an outside person looking in, I would want to say, okay, well, here, I want to pay as little here as possible. Why? Because it has an extra tax here. All right, and then I want to maximize this if possible, because it doesn't have the extra tax here. And this is why the S Corp exists. You can only do this with an S Corp, right? This is the only structure that's set up this way, where you're going to have, wages, reasonable compensation, and you're going to have like federal income tax, like net profits of your business. Okay, and I'll keep it simply like that. There are other structures you can kind of manipulate to kind of make it seem like this, but at the end of the day, The S Corp structure is really geared for this type of, you know, this structure to have it be earned income, which is your wages. That's the taxable for self-employment and tax, the FICA tax. And then this is also considered passive income. The net income of your business is considered passive income. Two different types of income structures. All right. And then you can take distribution out of it as you see fit, out of the cumulative profits of your business is what I want to say. All right. Now, hopefully that makes sense, guys. Now we're going to talk about this a little bit more. Now, if you have any questions about this, if it seems confusing, I want you to put something in the chat and say, hey, Cheston, slow down a little bit. I need to understand this a little bit more for myself. Okay. And we'll break it down so that you do understand it step by step. But what I want to leave you with in this part of the conversation is that you want to make sure you comply, because you have to pay yourself a wage in an S Corp. So you comply with, you know, that reasonable compensation, and you minimize the amount that you comply with. So I've seen people do this. They'll go and they'll pay themselves a high wage. I was just talking to somebody today, as a matter of fact. We had switched him up earlier in the year and said, hey, look, man, you're paying yourself too much. Now, guess what? He would have overpaid in taxes this whole year, right? Given the government a tax-free loan because his trucking company did not have enough profits to warrant how much he was paying himself in wages, right? He is actually, at this stage of the game, like this first quarter, he wouldn't have had to pay himself any wages really with the way the company was performing in the beginning of the year, right? And you know, he had some profits in owner investment inside of his company where he could take distribution out and still not really have any tax liability, because the business wasn't really profiting as enough at this stage yet to warrant any federal income tax withholdings. Okay, so we look at those things, right? Sometimes people will go out here and they'll just pay themselves a lot of money like he was doing and end up paying more taxes than necessary, especially like FICA tax. I mean, you're going to pay into that and then you're not going to get that money back, right? That's what it is, right? They're only going to refund you the federal withholdings amount if you have a refund at the end of the year. But once you pay that FICA, it's done. It's over with, right? If you're paying more so than what you need to, like that 15.3%, then that's money that's just gone for you. Right? And why? Why would you do that to yourself? You don't have to, is what I want to say. You can go out here and operate and execute like pinpoint to say, okay, well, I made this much money. This is how much I need to pay myself in wages to be compliant. No more than this. And then I can use the other amount of the net profits of the business as ordinary income, passive income that's just taxed at my ordinary tax rate at that stage, at that level. Right, and not have to get money that I won't get back in the future. Okay, now that's really cool to use this S Corp structure in a way where you can kind of see throughout the year, how much do I pay myself here, how much do I pull back here and pay myself, and how much do I take in profits. It's a balancing act throughout the year that we want to take into account. Now you can do this with your W-4. You can set your W-4 up like this if you're going to take wages now, and then pay yourself maybe even once a month, which is what a lot of our clients do. They pay themselves once a month or even once a quarter based on how the quarterly performance of their business, right? And understand that, okay, everything else you can keep in terms of just net profits of that business and not have to pay the additional 15.3% on that, all right? So a lot of the times what I'll see is people going out here and they'll do things, they'll set up an S Corp and they don't know exactly what to do with it. They'll go out here and they'll do random things with it, like pay themselves too much, or not pay themselves at all, which is another issue altogether, right? Compliance-wise, you have to pay yourself something in a wage, right? When I talk about paying yourself a wage, right? And then you'll get into another situation in and of itself, right? The other thing is like not filing on time. You want to make sure you file on time with these, right? When it comes time to file them, like these returns, the S Corp returns are due March 15th every year, right? So we need to make sure that everything is filed on time, or at least file your extension on or before that date, March 15th every year, or there's a stiff penalty. You're paying like $200 a month per shareholder that is late. All right, and that's what you deal with an S Corp. Okay, and then you have your extra tax return. That's another thing that you deal with. All right, an S Corp files its own return, and there's a cost to doing that. So guys, when we take a look at the ins and the outs of utilizing this every single day, you want to make sure, number one, you're using this vehicle to make sure you're not paying more taxes than necessary. And number two, as you're using this vehicle, you want to make sure you're following the rules and maintain compliance, is what I want to say. Okay. And it's not difficult, guys. It is just something that you want to pay attention to. And if you take the time to pay attention to it, it'll pay off greatly in terms of dividends, right? You'll be able to keep more money in your pocket. Taxes are the like top expense that a lot of people will pay in life, right? Taxes, paying taxes to a high degree, but we'll think that we have no control over it, but we do. We have complete control over how much taxes we pay. Right? Does that make sense? All right, so let's take a look. Let's take a look at really what that's going to look like out here in reality. I have something else I want to show you guys to be in the conversation so you can understand like really the impact of it number-wise. All right. So let's just say we're looking at this spreadsheet, right? So earned income. Earned income is really your net profits of the business if you're not an S Corp, if you're a sole proprietor instead, or if you're a partnership. This is the net income of the business, right? Earned income. Let's say that, for example, your business profited $125,000 and you do not have an S Corp structure. You just have just an LLC without choosing anything, right? So you're either a sole proprietor in the eyes of the IRS or you're a partnership in the eyes of the IRS. And then you go out here and make money. You're like, yes, man, I made $125,000 this year net profit. I've been able to keep $125,000 in profits for my business. It's a new level for you if that's what it is. And you're like, yes, I made this money, but you have not elected to be an S Corp. It's like going to be like, womp, womp, womp. You can't keep that money, man. Not enough of it, right? So this will be the impact, right? 36,550 bucks. This is roundabouts, okay? This is like an estimated taxes that you would actually owe if you're a sole proprietor, right? And this is in the filing status is married filing a joint return, okay? Now, the self-employment portion of that is 19,125, more or less, right? Which is just about more than half of the tax bill is self-employment tax. Get that, okay? It's more than half of your tax bill is self-employment tax. But what if you, instead, you took a wage of 50,000, which means now your profit is 75,000. Well, you just saved like almost $9,000 in taxes, right? That tax bill dropped from a little over 19,000 to just above 11,000. So about $8,000 is what you just saved in taxes, just by making a decision to file paperwork and become an S Corp, and then pay yourself $50,000 in a wage. That's the impact. Now, I want to ask a question. Well, is it worth you filing some paperwork to gain $8,000 in that situation? Yes or no? Right? Is it worth it? Let me see in the chat. Like, I want to hear some people in the chat. Let me see. Do you think it's worth it? Put a 1 if it's worth it. Put a 2 if you think it's not worth it in the chat. Let's hear from you. Yeah, definitely. It's worth it, right? It makes sense. It makes sense to do that. Now, well, why wouldn't people do this, right? Number one, because of lack of knowledge, they might not know that this is available. Number two, intimidation. Like they scared that they might mess something up, or they just don't know what they're doing to maintain compliance, or somebody hasn't had their back to keep that moving forward in the way that works for them, right? To set them up to win that way, right? Now, there are other things, guys, like when you switch to an S Corp structure, like this is just the one thing, just switching, and it makes this impact. It gives this impact on a reduced tax liability, right? Now, the other thing is just knowing, number two, how to Oops. That's even more savings, guys. I reversed that. My bad. It's 50,000 here. That's even more savings. 75,000 here. What am I doing? All right. Look at that. That's even more of a savings. A little bit off there, man. Look at that. That's almost 12,000 of a savings just by that switch. Look at that, man. Look at that. Now, if we had that one thing, but just not do that, but there's other things that we can do with the S Corp structure, like you can like get a retirement account. Let's say you really want to keep your money, and you're going to take most of your cost of living in the form of a distribution from the business, which means you're just going to take it that the distribution is this money here that we talked about. If you're going to take this distribution instead, and no tax that money, and then take whatever you put into a wage, and then use retirement, then the savings goes up, right? Because you get to keep that money into retirement. You put that in retirement, so the money's still it's going from your right pocket to your left pocket, right pocket to your left pocket, and then you save money in taxes, like you're not paying Uncle Sam, right, up front, right? And then you have other strategies like, like different retirement strategies, like Roth accounts and all these other things that you can use here to really accelerate the amount that you're able to save in taxes and put toward like your financial future. Like this, we call this wealth and legacy, is what we want to call that. Okay. Now, if you're in the conversation here today, this is an opportunity. If you have not switched to an S Corp, if you haven't really understood how to optimize the structure for yourself, I invite you to consider getting on a call, scheduling a call with me or a member of my team. All right. And finding out how can you utilize this structure to optimize your business, your trucking company, right? Because a lot of people are not doing that. Even with the S Corp structure, they're not taking advantage to this degree, right? They're either out of compliance, number one, with the wages, not paying themselves, or number two, paying themselves too much and not really knowing how much to pay themselves accordingly, right? And number three, not using some of the other vehicles. That's just another thing. Like retirement is just one other thing. There's so many other things that you can do by having this vehicle to make sure you don't have to pay any penny more, not one penny more than what's necessary in taxes. You get to keep that money and use it toward things that you want to use it for, is what I want to say. All right. So I invite you to get on a call, like schedule a call with me or a member of my team. You can do that if you're in the group. You can do that by clicking that link in the general community, the general conversation. There's a link there. Let's just go to that. There's a link here in the community that says work with Cheston, and it'll take you to my calendar where you can schedule a call with me directly or a member of my team. And then we can go over, man, how can we be profitable here using this S Corp structure? How can you maximize it? How can you leverage this structure to make sure you win inside of all the things that you do with it? Okay. And that's what we're here for. That's what we want you to do. That's what we really want for you. We want you to make sure, we want you to have everything that you came for when you decided to start your trucking company and go out here and create this for your life. Okay. And I imagine the reason that you got started is because you wanted more for yourself, right? You wanted to be somebody who had the freedom of an owner, right? And carve out your own path and create your own destiny inside of that, and definitely have more money at the end of the day for your efforts, and be able to grow your business into something that's a tremendous asset for you, where you can start creating wealth, you can start creating a legacy, and have a whole lot of freedom available. All right. So I will say that, guys, it's been great being with you in this conversation. Hopefully you got value on this call. All right. So if you got value in this conversation, if you're on the call tonight, let me know. All right. Let's go and write it down here in the chat. Did you get value out of this call? Give me a thumbs up if you got something out of this session for yourself. All right. I'm hoping that we're delivering something here for you that is extremely helpful, that can help you keep more money in your pocket, keep all of your hard-earned money in your pocket, give you some shed some new light on the conversation about S Corp, so it's not intimidating for you. You can go out here and use this structure to win in your business, win in your trucking company day in and day out, is what I want to say. All right, guys. It's been great being with you tonight. I'll talk to you next week. Take care, everybody.
All right, Cheston, have a great one. See you next week.
Love performing with my
See
children.
you next week.
It's rejuvenating for me to see them up there with me. It's such a blessing. I hope you're ready.